Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to provide an update to the bull market support band. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out Into the Cryptoverse Premium at intothecryptoverse.com. We did a video just a couple of days ago on Bitcoin's interaction with the 100-day moving average, which was all the way a little bit higher than the current price, but not that much higher. The 100-day SMA is right now around 59.7K. And what I said in the video from a couple of days ago is that if we fall below the 100-day SMA, then you should at least get some type of a reaction or a bounce at around that 55 to 56K level. And the reason for that is because that's where the bull market support band is, right? So the bull market support band ranges from around 55.5K to 56.2K. And we saw price go all the way down to about 56.5K. So we got really close to the bull market support band before getting this most recent bounce. Now, this is something that usually happens when we get back to the 20-week SMA. In fact, there's a lot of times where the week that you wick near the 20-week SMA, it doesn't actually touch it. And I'll show you a few examples. If you look back over here, last year we had a wick that got pretty close to the 20-week SMA in May, right around the same time, same time of the year. And then going into about mid-May, mid to late May, Bitcoin got a bounce. Right, it went up by about 5% on this weekly candle, but from the low to the high, it was about a 10% move. Okay, now that 10%, keep that number in your mind. So it was about a 10% move, but then what happened after that 10% move? Bitcoin faded and actually went to the bull market support band, right? But a lot of times it gets bought up beforehand. Look at it here in 2023. We got relatively close to it. And then Bitcoin got an even bigger bounce. That was a 18% bounce. But then inevitably it made it back down to the bull market support band about a month later, right? So you'll see, you'll get a move close to it. You won't actually tag it. And then about a month later, you tag it. So you saw that over here. And you saw that right here. You see that? All right. Same thing right here. We got relatively close to it, right? We went to 28.9K and the 20-week SMA was at 29.5K, so about $500. And then what happened, right? Everyone who was waiting to buy at the 20-week SMA, they get left behind. The price rallies up from that level about 5%. And then about a month later or so, you see us go below the 20-week SMA. But do you see that? You have three clear examples where that has happened. Three clear examples. Now, go back and look at the last, before that, right? So you'd have to go back to this bull market over here, and you'll see something kind of similar, but not exactly the same. In this one, we actually got a wick pretty close to it. We rallied about 10%, but it was still the following week where it collapsed below the bull market support band. Right? But it was about a 10% rally. We saw one of those earlier be about a 10% rally. If you look here, in April of 2021, right, we got a low not too far above that 20-week SMA. We got a huge bounce, 26% bounce. And then about a month later, we then fell back down to the bull market support band, and we ultimately fell below it. Now go look at 2019, and you'll see something very, very similar once again. You get close to the bull market support band, right? We went all the way down to about 9,300, and the 20-week SMA at the time was at around 9,000. Again, within a few $100. So everyone, all the algos that are waiting to buy the 20-week, they miss it, right? They miss it. You get the bounce, and this bounce here, let me redo this. So this bounce right here to this top, that was about a 16% move, right? To the top of the candle, about a 10% move or so. But again, once again, it was about a month later. We then fell back to the 20-week, and we actually tagged the 20-week, and then we fell below it. Okay? So you can see several examples of this. And basically what happens is, you get a lot of people that are looking at this and like, all right, well, we're close to the 20-week SMA. And that's why I mentioned in my last video on Bitcoin, where we talked about, the dubious speculation, whatever video it was called, where we talked about, that 100-day moving average. And if it fails to hold as support, which it did in the short term, right? If it fails to hold, then you should at least get some form of a bounce at around that 55 to 56K level. And at least we've gotten a local bounce at around 56.5K, just above the 21-week EMA, which is right around 56.2K or so, right? 56. Let me pull this up on the weekly to get a little bit better. 56.2K. So again, this is a very common pattern that we see happen with Bitcoin. In fact, we were following a similar pattern not too long ago. And it was this. We did a whole video on this. I didn't take the time to go find it, but I'm sure you could go find it if you're curious, where we compared the halving move to the spot ETF move. Now, look what happened going into the spot ETF. About 1 week before the spot ETF arrived, we swept the high. You see that in January, we swept the high about 1 week before. But here we failed to sweep it 1 week before the halving. So we did a video on this before we failed to sweep it, and then we did a video on it after we failed to sweep it, before the halving actually arrived. So here you swept the high, faded, and then put in a higher high. Here we failed to sweep the high, faded, and then put in a lower high. Do you see the difference, right? So this was a stronger move. It showed more strength. You still ultimately came back down and took out the initial low, right? Which is something that we said we're likely going to do. Do you see that same low? See what I'm talking about here? So you have this low that was taken out after the spot ETF. And then you have this low, which was taken out after the halving. Again, we did long videos on this very idea. So it's played out. The only difference between this move over here and the one we had earlier this year is that going into the spot ETF, the main event, we put in higher highs. Going into the halving, it was a lower high. So the thing to look at from here, if we get a larger bounce into the 60Ks, right? We're still at 59K. And you might say, well, Ben, isn't this a bounce? I mean, it is a bounce to some degree off of the recent low. But just a couple of days ago, we did a video on Bitcoin when it was at, 60K, right? When it was at 60K. And if you go look at it, we said, look, guys, this is where the 100-day moving average is. And there's a chance that if we go below the 100-day SMA, the next area of support might not be until around 56K, which is ultimately where we saw the bounce. So here we find ourselves in this position once again where we've gone just above the 20-week SMA. People are front running it a little bit, and it's leading to a bounce. But this is not really a bounce so far. This is still below the 100-day moving average, right? Imagine if yesterday, legitimately yesterday when Bitcoin was at 60.6K, close to, or 2 days ago when it was at 64K. Imagine if 2 days ago when Bitcoin was at 64K. Can you believe that? 64K was only 2 days ago. But imagine if 2 days ago when we were at 64K, I said, Bitcoin's going to get a bounce to 59K or to even 59.5K. You're like, that's not a bounce, right? So yes, in the short term, it feels like a bounce, but it's not really a bounce. It's just kind of noise, right? We're still below the 100-day moving average. So here's the thing. If the 100-day moving average holds as resistance, right? If it holds as resistance and we cannot get back above it, then you could get a situation similar to late 2021, right? Where, you sort of go back up a little bit, right? You sort of go back up a little bit, but then you still go below the 20-week SMA the following week. Okay, so first of all, if the bulls are going to run this back into the mid-60s, they have to conquer that 100-day moving average. Now, again, whether we took out this high from March going into the halving or not, I said that we were likely going to revisit this low, right? Sort of the same type of low. And now we have, right? We have in fact swept that low. Now the question is does the bull continue into the summer into a potentially left translated cycle, or do you get a summer lull? That's the question that I think everyone has to ask themselves right now. Because these patterns can repeat themselves, right? They certainly can repeat themselves. And I'm not trying to give the impression that it can't. My impression is that Bitcoin is going to outperform the altcoin market no matter the direction of Bitcoin USD. I know dominance is down today or yesterday, but let's just move past that, all right? I mean, this is noise. There is this idea, though, that, people will watch all these trends, and at some point, everyone sort of buys into it, and then rather than going to a higher high, it then results in a lower high, and then you get some type of intermediate downtrend that lasts for a while until maybe we get sufficiently into looser monetary policy. And so, first of all, that 100-day moving average is important. So the bulls are going to want to see a daily close above 59.7K in order to have a good chance of running this back into the 60s. If they can't get above that for the rest of the week, then you could just see capitulation below the 20-week SMA next week. But if, on the other hand, they can get above it, kind of like what they did back over in May of 2023, right? We had a wick below it, and then we rallied back above it for a little bit, and then ultimately we still went to the 20-week, but it took another month. Or right here, right? We got close, we rallied, and then we still went back to it a month later. Or in 2021, where we went below the 100-day moving average. You see that? We went below the 100-day moving average. We got a bounce, but then it's still a month later, we still fell. You can see that same pattern so many times, right? You get down to that 100-day SMA, you get a bounce back up, you maybe go below it, and then eventually you go back to that 20-week moving average. So that is where we are right now, right? I mean, and the thing to note is the difference, while these two moves are similar in the sense that we took out the low about the same amount of time later, I believe. This low was set here, and then we took it out about 42 days later. This low was set right there, and we took it out about, 57 days later, right? So not a huge difference, but there is a little bit of a difference. The main difference that I'm seeing is that these were higher highs, showing a lot of strength. These were lower highs. And then even the halving was a lower high. And this is that subtle difference that I think you kind of have to pay attention to. And it doesn't mean that there's a sure thing here. It just means that the bulls were a little bit weaker going into the halving than they were going into the spot ETF. And it's clear because in the spot ETF, we were putting in new local highs on that day. Going into the halving, we were not. The main difference that I see is that gold broke out here, but it didn't break out here. So if you go overlay gold onto this chart, again, I'm not asking you to treat gold as an investment. Most of you guys aren't going to care about it for the rest of your lives, but treat it as a signal, not necessarily as an investment. The breakout point for gold in 2019 is what ultimately marked sort of a turnaround point, right? When gold broke out. That's ultimately what marked the turnaround point for Bitcoin. It was when gold broke above that high, which, let me see if I can line this up perfectly, right? So it was right there. When gold broke above this high, that ultimately is what marked the turnaround point. And so that is why back over here in going into the spot ETF, when we had this pullback, and I was like, all right, we're probably going to get a pre-halving dip. We did. And then someone was like, well, what, is that it? Are we not going to get a larger one? And my response was, well, guys, this is what we normally get, about a 20% drop before going into the halving. That might be all you get, especially since gold hasn't actually broken out yet. But now the problem is that gold broke out, and that is why you could make the case that Bitcoin was unable to put in a higher high like it did going into the spot ETF, but instead it put in a lower high because gold was breaking out and it was somewhat signaling a risk-off environment, okay? So again, it didn't mean that there was not a lot of hype going into the halving. There was, but it was ultimately a lower high. And the main difference between this move over here into the halving and the spot ETF was in the spot ETF, gold had not broken out and ETH Bitcoin was still above support, but going into the halving, ETH Bitcoin was below support. It shows you that liquidity. Some of that liquidity was starting to dry up a little bit. So those are the main differences, right? And again, you can look, instead of overlaying gold, you can overlay the ETH Bitcoin valuation and see the same thing, right? Back over here, ETH Bitcoin was still popping up to new local highs and wasn't below support in any durable way, right? But now it has been, right? I mean, ever since Bitcoin put in this high, ETH Bitcoin has been roughly below support with occasional wicks back above it. And so that, I think, might be the difference as to why Bitcoin put in lower highs into the halving, but higher highs into the spot ETF, is because that one source of liquidity, there's multiple sources, but one of the sources is altcoin liquidity, and that liquidity from the altcoin market was starting to dry up a little bit. Now, again, it doesn't mean that you can't see Bitcoin go back into the 60s. Like, it's possible for that to happen. From the current point, we've only seen a 5% rally. We have seen one example earlier where it only rallied 5% before it capitulated the following week. I think that was sort of a late 2021 rally, right? You can see, I guess it was even more than 5%. It was about 10%. I think there was one example we looked at that was about 5%. Maybe it was this one from last year around the same time. Yeah, I mean, you can see that it first rallied about 5% and then faded again, and then it rallied about 7% and then faded back down. So there are plenty of examples where you get, after getting close to the bull market support band, you get a 5% rally at the very least, which is what we've gotten so far, okay? If the bulls want to run it up any higher, they've got to get above the 100-day SMA. If they can clear that, then perhaps they can get it back into the low to mid 60s. But the main thing to look for, because I know if that happens, we're all going to be looking at this. We're going to say, well, is it repeating this pattern of, put in a low and then sweep the low and run, put in a low and then sweep the low and run? Is it repeating that pattern or is it not? And so if you do get a move back up into the 60s, kind of like here, there's going to be a lot of discussion about that, right? Like if it moves up and then consolidates. And I think, you could see something like that happen if like the unemployment rate print is not so bad. And then the market just kind of waits for maybe the inflation data or something to come out. And if the inflation data just comes in hot again, then the market might throw in the towel for the summer and just say, all right, we got to go down. We got to deal with inflation remaining sticky. If, on the other hand, you get a different print, then, perhaps the trend could continue. But it's not my base case right now. I mean, I do think there's a reasonable chance we get a summer lull. And there's a chance that Bitcoin, tops when it normally does and at the end of the post-halving year. There's also a chance you get a left translated peak that happens this year. There's also a chance that you get a left translated peak where the peak's already in, right, in March. But there's a lot of different cases to consider. But I would say in the short term, if Bitcoin gets back above its 100-day moving average and gets daily closes above it and can run it back, say 10% from the low, that's essentially going to put you at around 62 to 63K. Now that might sound exciting, right? 62 to 63K. And that would kind of be the level that would be similar to this one, right? The main thing to watch for, though, is if you do run it back into that level, is it just another lower high, right? Because you can see that if we did, that would be that 62 to 63K range, if we hit that trend line again. And that, I think, could act as some form of resistance, that 62 to 63K range. Again, I don't know if it's going to go there or not, but remember, if it does go there, guess what happens? Bitcoin dominance goes up, because ever since this whole thing started, most of the time when Bitcoin USD goes up, the dominance of Bitcoin goes up. So that's one way you run dominance back up to 55% or maybe even higher, is you see Bitcoin go back up while altcoins take a back seat again. And then if Bitcoin gets rejected and comes back down, that's where altcoins might actually start to show a ton of weakness against Bitcoin. Because one of the reasons why altcoins show weakness when Bitcoin comes back down here is because they're sort of banking on Bitcoin holding support, right? It's investors saying, all right, well, if Bitcoin holds support, then you want to get alts, before the bounce comes because they get better bounces. But that's not always true during quantitative tightening and high rates. And so if Bitcoin holds resistance, then the altcoin market has to face this stark realization that, hey, maybe the uptrend is over for a little while and we have to consolidate at lower prices. So I would keep an eye on this going into about that mid-May timeframe, because mid-May also would correspond to alt Bitcoin pairs repeating the same pattern that they did from the last cycle. If you think about it, right? If you look at alt Bitcoin pairs, when they ultimately capitulated last cycle, you can see that they came back up into these highs in May, right? And so I do wonder, and then they ultimately capitulated in June. But I do wonder if you're just seeing something similar happen right now, right? This low right there was in May 13th. This low here was it was April 8th, but I think it actually was April 13th. It was basically around that same day. And so what happened over here is that 5 weeks later, all Bitcoin pairs were putting in new lows. If that's going to repeat itself, then that could mean that late May, all Bitcoin pairs could be putting in new lows. And the reason why that could theoretically occur is if Bitcoin puts in a lower high, right? Because that's the structure, right? You put in a high, you put in a lower high, and if you do it again, then you convince people, okay? Like if you look at this, say, parallel channel, you can kind of see what I'm talking about. You see what I'm saying here, right? I mean, you have a high, you have a low, a high, a lower low, a lower high, and then now we're all the way over here. So if this just ends up resulting in a lower high, then that's when altcoins are like, oh crap, Bitcoin's actually done for a while, and maybe it'll pick back up later this year or in the post-halving year. But that is where altcoins could theoretically throw in the towel. So I would say keep an eye on that, because I'm sure everyone is looking at this. And we talked about it beforehand, right? We said we're likely going to sweep this low. That's the first step, is sweep the low. Sweep this. We swept this low from back over here at Spot ETF. Now we've done the same thing once again. Sweep the low. And a lot of people are going to look at this and say, that means it's going to play out the same way. And they could be right? They could be right. It's a market. I'm certainly not always right. You guys know that. Let's not pretend, right? We know I'm not always right. So there's a chance that they could be right. And it just continues. But there's also a chance that the market is saying, hey, halving was a lower high compared to this, whereas Spot ETF was a higher high. So there's kind of a change in the trend, right? Kind of a change in the trend. Also, remember that ETH topped out 1 month before the merge, right? I mean, now, of course, it's higher today, right? But if you think about it back then, what happened is the merge was here, the merge was right here, but you put in a high 1 month before the merge. We talked about this a lot for Bitcoin. We said there's a good chance that it puts in a high 1 month before the halving, just like ETH put in a high 1 month before the merge. You see that? And ultimately, ETH dropped about 50% from the high before gearing back up. You know why that's interesting? Is because that's exactly what Bitcoin did in 2019. Is it dropped 50% from the high. I know it dropped more going into the pandemic, but let's just ignore that, right? You had a 50% drop. So, I mean, like, if Bitcoin were to do anything remotely similar to that from the high, which, again, I know when you're in an uptrend, people never want to talk about lower prices, but, if you do get like a 40% drop, that puts you back down to these levels. And if you get a 50% drop, that puts you back down to 35K, which coincidentally would be right around the area that the 100-week moving average is going to. Now, you might say, why he's been talking about the 100-week moving average? No one cares about that. We're well above it. The only reason I bring it up is because last cycle we broke above the 100-week SMA and we rallied about 100%. And no one thought we were going to go back to the 100-week. And then Bitcoin dropped 50% and we went back to the 100-week. Cycle before that, we rallied. We didn't rally nearly as much, but it was about a 10% rally. And then we came back down to the 100-week SMA. Here, we've rallied about 150% above the 100-week SMA. And the 100-week SMA is all the way down at 31K, which coincidentally is this area that we broke out from in 2023. but it's going to be continuing to move up here, right? It's about to surpass that level. So I would still keep an eye on that because, again, I know that everyone's going to look at this and say that it has to play out the same way as it did last time going into the spot ETF. But there's a chance that the reason it continued to show strength going into the spot ETF is because investors knew the halving would come next. And there was always going to be something else to talk about, which is why I also said Bitcoin dominance was going to go higher, because the halving, people are going to focus on that before they were going to focus about a potential ETH spot ETF. So if Bitcoin clears the 100-day, the next area to look for is going to be 62 to 63K. And if it cannot get past that, right? If it cannot get past that and go up to 64, 65, 66K, if it cannot run back up and it just puts in another lower high in May, then that would likely be confirmation of a summer lull, okay? But a lot of times before you get a summer lull, you get one last attempt to make it not happen. Kind of like last year. If you think last year, going into May, we had a pop in the price. But then by the time you got out into mid-May, we came back down. If you look back over here in 2021, you got a move going up from late April, and then it topped out about mid-May, right? About a week and a half from now. But we still got a summer lull. But you still had that move to maybe convince people that you weren't going to get a summer lull. Right? And by the way, over here in 2021, we did the exact same thing. We had a low in March that we swept in late April, but then the next move was just a lower high. You see that? You had a low in March, you sweep it in late April, you put in a lower high in May. We've seen that a lot, right? I mean, again, same kind of thing. Here, you have a low in March. You sweep it in late April. Do you just put in a lower high in May? There's a chance, right? There's definitely a risk of that. So I would watch that 62, 63K range if we get above the 100-day. And again, I say that with no guarantee that we even get above the 100-day SMA. There definitely are times in history where the 100-day SMA, while it might offer a little bit of support, it only gets a couple percent above it before just kind of fading back down. I mean, that's basically what happened last year at this time. I mean, we had a wick below it, and we got back above it, but it wasn't really much of a bounce. And ultimately, it just resolved to a lower high, right? You see that? It just resolved to a lower high, and then you still had a lower low in June. And then you got another move up. But I do wonder, if something like that could play out, right? Where you form a lower high in May, and then you get the summer lull. So, but again, the markets are going to keep us on our toes, right? It's not like it's going to be obvious. If we do get a bounce into the 60s, obviously the bulls are going to say who bought the dip. If we get a capitulation, below the 20-week SMA, immediately, like November, the bears are going to go on a parade. Again, there's no way to know what's going to happen. I would have a plan to stick to it. I'm just outlining these possibilities, and I'm showing you, based on what the data says, what I think could happen, but I also think it's worthwhile to hedge against those views as well. So the 100-day SMA is going to be that first area to get past for Bitcoin. If it can't get past that, then you're likely just looking at a capitulation below the 20-week SMA sooner rather than later. But if we can get above the 100-day, then you could very well repeat these patterns of lower highs, and then the final, you get a last lower high in May before a summer capitulation. Same thing over here, right? A lower high in May. A lower high potentially in May. All right. So that's what I would look at. And if this does ultimately just resolve into a lower high, then you're likely going to find yourselves with Bitcoin at its 20-week SMA or below it later on, maybe by late May or sometime in June. That would be my guess, is you'll find Bitcoin back at the bull market support band late May, early June, if it does get a bounce here going into the middle part of May. And one of the reasons is, we do have the unemployment rate coming out tomorrow. So if that comes out and it's like, okay, and it's not worrisome, then the market might use that as a reason to go back up, right? But I would certainly follow this stuff, because May does tend to be a very difficult time for Bitcoin, where it can rally, and it kind of, what ultimately happens, and this is kind of funny, I've noticed this so many years in a row, and I just want to put this out there for people that have fallen into this trap. What happens is people say, sell in May and go away. That's what they always say, right? But what usually happens is the market tops before May. It puts in a local top before May. Last year, it put in a local top in April, right? So, I mean, if you waited until May 1st to sell, right? Or if you waited until sometime in May to sell, you then ended up having to put you may be sold, and then you saw it rally into a lower high where you potentially FOMO'd into, okay? Even in 2021, right? You can see over here, we came all the way back down here, and then people were like, we'll sell in May and go away, and then we got a pretty big rally back up to 60K, right? All the way from 47K to 60K. That was a huge rally back then. And it brought a lot of people in. That was where the ETH tsunami occurred, actually. Now, I don't think that's occurring now because we're in quantitative tightening and high rates. That was quantitative easing and low rates. Just like in 2019, when Bitcoin put in lower highs, we didn't have an ETH tsunami, right? ETH Bitcoin still bled, even though Bitcoin was putting in lower highs. So that, I think, is it's interesting because that's what happens is a lot of people say, well, sell in May and go away. But a lot of times the top occurs before May. It occurs in like April or something. Even in 2013, the top was this top was in April. And if you waited until May to sell, I mean, you had already, I mean, it did eventually go lower over here in the summer, but you still ran the risk of sort of selling into fear just before a bounce. And then you're like, oh crap, I sold into fear. You get a bounce, you buy back into greed, and then it actually goes to where you thought it was going to go anyways. So a lot of times what happens with the whole sell in May and go away stuff is that Bitcoin puts in a local top in like March or April. So by the time you get to May, everyone's fearful because we're sweeping the lows. Everyone says sell in May and go away. Then you get a bounce sometime in May that makes that a meme. They're like, well, who sold in May? Because you get a bounce that forms into a lower high, and then in the summer, the people that were making fun of the people who sold in May, then we actually go put in a lower low, right? Based on that, that current downtrend, right? That's what usually happens. You get a bounce in May, and then it tops out sometime in May, and then you go lower in the summer. So I do think something like that could happen, where whatever this resolves into could very well be a lower high. And that doesn't mean that, we cannot take out 73K ever, even if this is a lower high, right? Even if it is, it doesn't mean we can't eventually take this out. Again, I've showed this a lot before. If you look at peak to peak ROI after cycle peak, we're so far ahead of where we were in the last two cycles that even if we were to get a 2021 style drop going into the summer, it would actually just put us back in line with prior cycles, right? I mean, it's not like, I know everyone will be scared out of their mind, but it would actually just put us back in line with prior cycles, even if that were to happen. Even if Bitcoin rallies back up into the 60s and then capitulates to, say, the 40s or something, or even lower, it would actually just put us back in line with prior cycles. In fact, at this point in prior cycles, as measured from the peak, Bitcoin was still down 50%. From the 69K peak in 2021, that would correspond to about 35K. Bitcoin could legitimately, right now, be at 35K, and everyone would think it's the end of the world. But in reality, that's where it normally is at this point in the cycle. I'm not saying that has to happen. What I am saying is that if that does happen, if it does happen going into the summer, if you get a large drop, where do altcoins go? This is the reason why I say during QT, high rates, just ride Bitcoin. Don't worry about alts, because Bitcoin's going to put in new highs before most alts anyways, which it has, and it's near the highs. But if Bitcoin gets a drop into the summer, let's say in June, July, if it goes back down to even 40K, alts are closer to their lows than their highs, right? They're closer to their lows than their highs for the most part. That's why altcoins can often put in lower lows when Bitcoin gets that correction, which we normally see. Last cycle, we saw it in the pre-halving year because rate cuts occurred in the pre-halving year. We did get another lower low in the halving year because of the pandemic, but a lot of alts are putting in lower lows in the pre-halving year because that's when rate cuts occurred. This time, maybe we're getting rate cuts in 2024, the halving year instead. So that's what I think the next topic of discussion is going to be for the next few weeks is it a lower high or is it something different? And all I can say is that, it certainly looks like the bulls were losing strength here because they were not able to put in a higher high compared to the spot ETF. And if that's the case, and this just forms into a lower high once again, then you're likely going to get a summer lull. And then maybe the markets pick back up later this year, after a summer where the market's not doing a whole lot. If we get back up to 60s, and instead of a lower high, you run it back up to the, back up and you put in higher highs, then I would definitely be more on board with the left translated cycle peak. The great thing about it for me is that, you don't have to know what's going to happen. You just have to be able to manage your risk. And, for me, what that means is selling into high risk periods and buying into low risk periods. So that's why, I've talked about dynamic DCA. When we went to 73K, the risk on Bitcoin went to the 0.7 to 0.8 risk band, right? And so by selling a little bit into that without worrying about the narratives, now that you're down here, you could have the luxury to buy it back if you wanted to. Or if you don't, who cares? I mean, you could put that money somewhere else and hope for a summer lull and then buy it then or something. But what happens a lot of times is people buy into the mania. They buy at 0.75 risk because everyone's talking about Bitcoin, and then you end up getting a pretty large correction, and now they're wondering, well, what do I do? And now those people, of course, are very much biased into saying, well, it has to go higher. You're wrong. It has to go higher because, well, they bought the highs. If you bought over here, even if you think it goes higher and you're wrong, who cares, right? And I published. I said I was buying Bitcoin back over here many, many times. And I also published it on ITC Premium. And I said, buying Bitcoin, setting my limit orders between 15 to 21K. Well, really, I set them between 10K all the way up to 25K. It was sort of a range. I was I don't know how low it's going to go. But I think most of them were set around 18, 17, 16, 15, and 14 and 13. The ones at 13 and 14 were obviously not filled. There was a chance that Bitcoin could have gone that low, but it didn't. And I don't know how low it's going to go. Right? I don't know. But I think zero risk was all the way down there, right, at some of those lower prices. And then, we went to, I think, about 0.1 risk or something, right? But that's the thing, right? If you DCA some down here, then when you're up here, if you think it's going to go higher and you're wrong, you can, you'll live through it, right? You're going to be okay. It's, so what, right? If you just joined crypto here and you bought the top and now you're crap, what do I do? Then if there is a rally, your bias will be to say, see, I told you so. But then what if it results in a lower high that leads into a summer lull like this? And that's what can scare a lot of people. These lulls that occur sometimes in the summer, in Q3. And so that, I think, is something that could play out. And if it does, it would certainly scare a lot of the spot ETF people. The people that only buy Bitcoin because they got exposure through it, with it through the spot ETF, that could scare those people. And so that's what I think we have to look at right now. So to just clarify, my base case right now is that Bitcoin does eventually go to its bull market support band. You might say, well, it already went there. It got close, but it's best to be technically correct, and it still actually hasn't hit it yet. I think it's going to hit it, but it still could be a few weeks from now, for all I know. If it follows late 2021, it'll be next week. If it follows 2019, early 2021, or any of the two moves, the moves we saw last year, it'll be sometime late May or early June before it happens. I've often compared this to 2019 because I think it's 2019-esque in the sense that gold broke out around the same time that Bitcoin found a local top, right as around the same time that ETH Bitcoin broke down. And so that's why I'm kind of looking at this as that's kind of what's happening, where it's, you have a high, you have a lower high, you have a lower high, and then you get 3 red candles that get you close to the 20-week, you get one more pop up, and then you just slowly bleed back down and then capitulate. I think that could be playing out, right? But honestly, this time has been a little bit worse because it's basically just been all these red candles. So, you know, but even in 2019, I mean, it took a while, I mean, for us to even get back down to the bull market support band and to go below it. And if you take a move from it, right, from where this topped to where we fell below it, it took about 13 weeks. So just to give you an idea of where that would put Bitcoin, 13 weeks would be June. That would be June. And the reason why June is important is because I could see Bitcoin dominance topping out in June at the earliest. I think it might go later than that because the Fed is slowing the pace of QT, but I think June at the earliest is where dominance can top out. And if that's the case and dominance tops out in June, then it would likely correspond to it topping out before Bitcoin goes below the 20-week estimate. There is a chance that dominance tops after Bitcoin goes below the 20-week estimate. There's a chance. I mean, even Tesla was outperforming Rivian recently, even though it was below the 20-week estimate. So it's a chance that that could happen. But if it plays out like 2019 and you see it basically just take until about mid-June to fall below the bull market support band, let's say it bounces for a couple weeks and then fades back into June, what's going to happen? Dominance should go up. Remember, last cycle, dominance topped here, just before we went below the bull market support band. If you look at dominance excluding stables, it tends to find a local top in the summer, right? This was June, but then you had a higher high in July. Then 2 years ago in 2022, local top in June. 2023, we had a local top in June. We went higher later that year, but still a local top in June. In the summer, that's why I'm saying, look, I think dominance is going to rally up in the summertime, and it could be that it rallies up as Bitcoin is getting closer and closer to that bull market support band, and maybe as more people are starting to accept the fact that, hey, we're going to have a summer lull. So that's kind of my thoughts on the market. I just want to provide that. And a lot of times when you see Bitcoin go down like 5 weeks in a row, obviously a lot of people are very pessimistic, and I get it. And you guys know my thoughts. I mean, I do think there's a really good chance we're going to have a drop later this summer that's going to essentially rip alts a new one. But in the meantime, you know, could you get a counter trend rally for a little bit? It's possible. You had a counter trend rally here, same time of the year. You had a counter trend rally here, right? All these counter trend rallies occur, right? It doesn't necessarily take away from the idea. So, you know, this is 5 red weeks in a row. Guys, if we get a green week next week, look to see if it's a lower high or if it resolves into something different, right? I've told you my reasonings for why I think what's going to happen, but those are just my views, and I could be wrong. And then the other thing is, if this really is just it, and you don't get any lower high, I mean, if the lower high is just a daily close below the 100-day SMA, then you could get something like this, where you just get outright capitulation. If that happens, then I could see a case where dominance tops after we go below the 20-week SMA. Like, it could be something like this, where you go below it and then you bounce, and that's where dominance tops out, right? And if you're thinking about like what I said earlier, look at the Rivian Tesla valuation. It just broke the lows on a Tesla bounce, but the Tesla bounce occurred when Tesla was below its bull market support band, and it still is. Right, that Rivian Tesla broke down on a Tesla bounce below its 20-week SMA. So there's no guarantee that Bitcoin dominance even tops out above its 20-week SMA. Tesla kind of shows that it might not, actually. And maybe it tops out, you know, maybe it does something like this, where it fades back down and then bounces, and then that's where dominance tops out. That could happen too. So definitely a lot of things here, guys. A lot of things to consider. Bitcoin heavy crypto portfolio, I think, still makes more sense than alt heavy, because I think no matter what, Bitcoin's going to crush the altcoin market. If Bitcoin goes up, alt Bitcoin pairs bleed. If Bitcoin goes down, alt Bitcoin pairs bleed. You might say, well, Bitcoin just went down and alt Bitcoin pairs didn't bleed. No, they did bleed. You're just looking at this week. Bitcoin's been going down since March 11th. If you look at alt Bitcoin pairs, March 11th was way back over here, right? The week of March 11th, alt Bitcoin pairs were at 0.47. Now they're at 0.44. So don't tell me that alts are outperforming Bitcoin in a Bitcoin USD downtrend. They're not. Just because you get a counter trend rally doesn't change anything. This is exactly what happened last cycle before capitulation began for alt Bitcoin pairs. In fact, if you look at Bitcoin dominance plus USDT dominance, this is the exact same level we were at. This pullback right here, it was this pullback. Do you see it? This pullback right here that came back to 59%. You see that 59% pullback? That's where we are right now. And it held just above the bull market support band, which is where we are right now. And you see what happened. It skyrocketed into the summer, which is what I think is about to happen. So Bitcoin dominance, 60% is my target. I think that alts are still extremely risky. And yes, you can get counter trend rallies, but they should probably result in lower highs. I do not think altcoins are worth the risk against Bitcoin. I've been saying it for 2.5 years. Once Bitcoin dominance is at 60%, then you can start to make the case for it, I think. But until that time, to me, everyone's getting all up in arms about this pullback by Bitcoin dominance. It's just retesting the same area that it took forever to break out from. And everyone's losing their mind. What was previously resistance is now turning into support. The FOMO Bitcoin dominance for the last half year is now the FUD Bitcoin dominance. It's amazing how the market works, right? It's amazing how 54% just a couple of months ago would have been super crazy. Like no one was like, everyone was saying top, dominance had topped, it was just going to go down. And then it went to 57%. Now, because it went to 57% and it had a pullback to 54, everyone's losing their mind. But what if it's just retesting the breakout point? Just like it did over here. When it broke out, it came back down, it retested it, it checked in with the bull market support band, and then it went up. Why can't it be doing the same thing again? That doesn't mean you can't ever go below 54%. In fact, we have. But remember, over here we went above 54%, but they were just wicks. So maybe you do go below 54%, but maybe they're just some wicks. We already had a wick below it. I still think dominance is going to go higher. I think Bitcoin is going to show the altcoins what's what and who's who as we get into the summer. And then finally, I think alts will capitulate against Bitcoin. That'll mark the top for Bitcoin dominance. QE will resume later this year, early next year. And then the cycle goes on, and the cycle goes on, and the cycle goes on. Thank you guys for tuning in. I'll see you guys next time. Bye.